Every investment carries costs. Golden Visa funds often stack multiple fee layers, some of them disclosed, others hidden. This video will break down each type so you know what questions to ask before signing. Many retail investors focus only on the €500,000 minimum for Portugal's program. That's just the sticker price. Think of it like buying a house. Beyond the sticker price, you need to account for closing costs, property taxes, and maintenance. In Golden Visa investing, maintenance is recurring fees. Let's unpack the layered fees that come with Golden Visa investments. Subscription fees, paid up front to the fund, these are often 1% to 3% on top of your investment. Management fees, these are annual charges for operating the fund, typically 1 to 2% of your investment capital. So subscription fees are on top, management fees come out. Custody fees, these are paid to banks or fund managers for holding in custody the digital fund units that correspond with your fund subscription. Legal and immigration fees, for services to process your visa application and residency cards, these add up to €15,000 to €20,000 for a single applicant over a 5-year period, more for families. Currency exchange costs, these are often overlooked but a critical hidden expense. You're going to need to move US dollar into euro and then euro back into US dollar. There's fees on both sides. Let's look at a concrete example. One €500,000 fund investment, you might pay up an upfront subscription fee of 3%, which is €15,000. Over a 7-year fund term, typical 1.5% annual management fee would add up to another €52,500. Add on legal fees, government fees, currency exchange costs, and you're looking at well over €70,000 in costs before you see a single euro of return. The true financial commitment is far greater than the initial €500,000. Now, while these are fees, it's also wise to budget for a major tax obligation in the US. As an American investor, your fund is likely a PFIC or passive foreign investment company. If you elect QEF, Qualified Electing Fund, tax treatment to mitigate punitive taxes, they're required to pay income tax each year on the fund's gain in value, even if the fund hasn't distributed any cash to you. This is known as phantom income tax, and it's a financial obligation you must plan for. Let's talk about something that catches almost every US investor off guard in this space: free advice. When a migration agent or fund introducer says their advice is free, it sounds great, but here is the truth. You may not be paying them directly, but someone is. Many of these agents earn high commissions from the fund when you invest. These commissions create misaligned incentives. When someone offers free advice, ask how they're compensated. As an investor, you deserve transparency. Always ask, who's paying you? Are you recommending the fund that's best for me or the one that's paying you the highest commission? Licensed to offer investment advice or private placements to US investors? This is a critical part of the diligence process. For a full education on how to navigate this process, I welcome you to join the Don't Get Burned Golden Visa Risk Masterclass.